Trading with the Algorithm. Oliver Chen was 15 when he first discovered the stock market. It began innocently enough. His uncle, a financial analyst, showed him a candlestick chart one evening during a family dinner. Green bars, red bars, mysterious wicks stretching up and down. It looked less like numbers and more like secret signals. This, his uncle said, tapping the screen, is how money moves in the world. Oliver was hooked. He spent nights scrolling through free stock websites, watching tickers move like heartbeats. To his friends, charts were boring. To him, they were alive. He saw patterns, triangles, flags, breakouts, that seemed to whisper hidden truths. But whenever he tried to trade with his small allowance, he failed. Buy high, sell low. He lost more than he made. That was when another obsession collided with the first: artificial intelligence. At school, Oliver was already known as the computer kid. He taught himself Python, built little chatbots, even won a coding fair with a rudimentary language model. But the idea of combining AI with the stock market, that was a revelation. Humans are emotional, he muttered to himself late at night. They panic, they chase. But algorithms, they don't. He downloaded historical price data, fed it into a neural network, and trained it to recognize patterns that led to short-term price movements. At first, the predictions were random noise. But after weeks of tweaking, adding features, adjusting layers, the program began to see something. It wasn't perfect. It didn't win every time. But in simulations, it outperformed random guessing by a wide margin. Oliver named it Athena, after the goddess of wisdom. With trembling hands, Oliver connected Athena to a paper trading account, a sandbox where trades weren't real, just simulations. He watched as Athena issued buy and sell signals, sometimes holding positions for hours, sometimes seconds. After a week, his fake portfolio was up 15%. Okay, he whispered. Now for the real thing. He begged his parents for a $500 loan, claiming it was for coding experiments. They didn't ask too many questions. Within a month, that $500 grew to $750. Then $1,200. Then $2,000. Pocket money had turned into a nest egg. Oliver felt unstoppable. No one at school knew. To his classmates, Oliver was just another kid in hoodies, sketching charts in his notebook margins. But online, through trading forums, he was becoming a ghostly legend. He posted vague screenshots of his algorithm's performance. People asked, "What's your strategy?" Oliver only replied, "Just following the data." The truth was, even he didn't fully understand Athena's decisions. The neural network was a black box. Sometimes it predicted a reversal seconds before it happened, as if seeing the future. Other times, it failed spectacularly. But the wins far outpaced the losses. By 17, Oliver had quietly amassed over $150,000 in his brokerage account. Money changed things. He upgraded from his old, wheezing laptop to a monster rig with 6 GPUs, cooling fans glowing like neon. He bought designer sneakers, a new phone, a secret stash of luxury snacks hidden under his bed. But the real temptation wasn't spending. It was scale. If Athena can make $1,000 a week with $10,000, he reasoned, what about $100,000? Or $1 million? The thought consumed him. He started leveraging, borrowing money from the broker to magnify trades. Sometimes it worked, doubling his profits overnight. Sometimes, a wrong bet nearly wiped him out. Athena was brilliant, but markets were merciless. Oliver learned fear and greed weren't just human weaknesses. They infected him, too. One autumn afternoon, Athena made a bizarre call, buy heavily into a small biotech company minutes before it announced groundbreaking drug results. The stock soared 200% in a day. Oliver's account ballooned by tens of thousands. But he froze. How had Athena known? The AI wasn't supposed to access insider information, it only analyzed price action, volume, and public sentiment scraped from the internet. Was it possible that the signals in the data foreshadowed the news? Or had Athena stumbled into something darker? He brushed it off, telling himself it was luck. But regulators didn't believe in luck. It happened on a gray Thursday. Oliver was home from school, watching Athena churn through trades, when the doorbell rang. Two men in suits introduced themselves, U.S. Securities and Exchange Commission, Enforcement Division. Oliver's stomach dropped. They asked questions. How was he achieving such consistent gains? Did he have access to non-public data? Was he part of a coordinated group? Oliver stammered the truth. I built an AI. It just sees patterns. The agents exchanged looks. One said, "Son, if that's true, it's extraordinary. But extraordinary claims invite extraordinary scrutiny." They left him shaken. Word spread in trading forums, a mysterious teenage genius under investigation. Some hailed him as a prodigy. Others accused him of cheating. Brokerage firms began limiting his trades, citing unusual activity. Banks refused to lend. Even his parents, once oblivious, confronted him. Oliver, his mother said, eyes wide with fear, "Are you breaking the law?" "No," he shouted. Then quieter, "I don't think so." The truth gnawed at him. Athena wasn't illegal, but it wasn't explainable either. Regulators demanded transparency, but how could he explain the tangled neurons of a black box model? The very brilliance of Athena was also its curse. By 18, Oliver faced a decision. He could shut Athena down, return to a normal life, maybe study computer science in college. Or he could push further, challenge the financial establishment, prove that an AI could outsmart Wall Street itself. One night, staring at the glowing charts, he whispered to himself, "Why should the big banks have all the power? Why not me?" He doubled down. Athena evolved. He trained it with reinforcement learning, feeding it live market streams, letting it experiment with microsecond trades. It became faster, sharper, more ruthless. Profits returned with a vengeance. Millions flowed in. But so did enemies. Regulators filed official complaints. Brokerage firms froze his accounts. Headlines screamed. Teen trading was under federal investigation. Is this AI cheating the market? Oliver was summoned to testify before a financial oversight committee. Sitting in a suit that felt too big, he faced rows of stern-faced lawmakers. "Mr. Chen," one asked, "did your program access insider information?" "No, sir," Oliver replied. "It only reads public data. It just connects dots no human can." "Then why can't you explain how it works?" Oliver hesitated. "Because I don't fully understand it myself." The room erupted. In the end, regulators couldn't prove wrongdoing. Athena hadn't hacked, stolen, or bribed. It had simply seen. But they imposed restrictions. His trading accounts were capped, his algorithms monitored. The golden age of secret riches was over. Oliver walked away with enough money to last a lifetime, but more importantly, with a realization. He hadn't built a machine to get rich. He had built a mirror, one that reflected the hidden rhythms of human greed and fear. Athena hadn't broken the market. It had revealed its fragility. Years later, Oliver became a researcher, advocating for transparency in AI-driven finance. He told students, "I was just a kid who loved charts. I thought I found a cheat code for money. What I really found was a lesson: power without understanding is dangerous. The future isn't about beating the market, it's about making it fair." And in quiet moments, he sometimes reopened Athena, watching its predictions dance across the screen, like whispers from a future only it could see.